Welcome to CoreLogic RP Data's update on housing market conditions for February 2016, brought to you by Remax WA. With the festive period now well and truly behind us, we're starting to get the first signs about what to expect across the housing market in the new year. After a combined capital city index recorded no change in dwelling values in December, the January figures showed a 0.9% rise in home values, driven by strong conditions in Melbourne, where dwelling values were 2.5% higher, as well as Hobart and Canberra, where values were 4.7% and 2.8% higher over the month. Sydney values also moved upwards 0.5% over the month. The stronger than anticipated monthly movements come after dwelling values were absolutely flat across the combined capitals in December and down by 1.5% in November. The January figures weren't high enough, though, to take the rolling quarterly rate of growth back into positive territory, with the capital city dwelling values remaining 0.6% lower over the 3 months to the end of January. Looking at the trends in value movements suggests there may be a further slowdown in the housing market as we move through 2016. The annual pace of growth has reduced from a recent high of 11.1% in July last year down to 7.4% across the combined capitals index. Sydney's housing market has seen the annual pace of capital gains reduce from 18.4% in July last year to 10.5% over the 12 months to the end of January. That's a 29-month low, and for the first time since 2011, Melbourne's now recording a higher annual rate of growth than Sydney at 11% per annum. If the pace of growth across Sydney and Melbourne continues to moderate, as we expect, there will be a further drag on the overall combined capital's average rate of capital growth. The slowdown in home value growth isn't unique to Sydney and Melbourne. Darwin's housing market was the first to peak, with values sliding since May 2014, and Perth's market peaked in December 2014. While it may be too early to call the peak in the Sydney cycle, values are down across Australia's largest capital city by 2% since a recent high achieved in October last year. The slowdown was foreshadowed by falling auction clearance rates over the second half of 2015, with Sydney's auction clearance rate falling as low as 52.9% in December, while the clearance rate in Melbourne was more resilient, hitting a December low of 63.3%. The number of homes available for sale across the capital cities is higher than a year ago, which is pushing average selling times higher and forcing vendors to discount their price expectations. There are approximately 9% more homes currently advertised for sale compared with the same time last year, with every capital city except Hobart recording a rise in the number of sales. More listings translates to more choice for buyers and less leverage for sellers, so we'd expect the average selling time and the rate of vendor discounting to rise as more data flows through for 2016. Transaction numbers have also shown some softness over recent months. CoreLogic estimates that sales volumes over the 3 months to the end of January were down by 10.5% compared to the same period a year ago. The slowdown in buyer demand can probably be attributed to factors such as fewer investors and affordability constraints, as well as higher mortgage rates as the result of higher capital requirements imposed on the banking sector by APRA last year. The slower rate of absorption is likely to be another reason why the number of homes available for sale has pushed higher over recent months. Dwelling values across Perth fell a further 1% in January. However, the 2.7% rise in Perth values over November and December saw local dwelling values stage a 1.7% increase over the rolling quarter. The trend in home values across Perth is still appearing to be a downwards one, though, with home values 4.1% lower over the past 12 months. Higher listing numbers and a slowdown in buyer demand helps to explain the slowdown in Perth's housing market. Listing numbers have shown a sharp rise across the Perth metro area, with the number of homes advertised for sale approximately 13% higher than at the same time last year. At the same time, our estimate of transaction numbers has reduced by approximately 11% over the past 6 months compared with the same time a year ago. Overall, the early indicators about how the housing market's travelling in 2016 have been relatively positive so far. Dwelling values across the combined capital cities were up 0.9% in January. However, it's important to note that data flows don't really return to normal until early February. Late December through to late January is generally characterised as a seasonally slow period for transaction numbers, which makes it harder to accurately gauge the performance of the housing market until activity starts to lift. Despite interest rates remaining on hold in February, there's also the potential that the cash rate may move lower over the first half of the year. Inflation's tracking at the bottom of the Reserve Bank's target range, which provides plenty of scope for the Reserve Bank to cut the cash rate if they see a requirement to do so. Previously, with housing market conditions running hot, a cut to the cash rate risked stoking the pace of capital gains even higher. Now, with much of the housing market heat dissipating, the Reserve Bank may be less concerned about overstimulating home values and investor demand while attempting to provide a broader level of stimulus to economic conditions. The ASX cash rate futures indicates that financial markets have fully priced a 25 basis point cash rate cut by September this year. If the cash rate does fall further during the year, there's no guarantee the full rate cut will be passed on to mortgage rates, given the increased capital requirements and higher funding costs being faced by Australia's banks. Our view remains that the rate of capital gain across the combined capitals in 2016 is likely to be less than the 7.8% experienced in 2015, driven by a slowdown in Sydney and Melbourne and continued softness in the Perth and Darwin markets. As housing market activity continues to move out of its seasonally slow festive period, we're likely to have a much better gauge on how the overall housing market performance is tracking in the new year. Until then, thanks for tuning into CoreLogic's monthly housing market update. If you want to stay up to date with your local housing market conditions, make sure you visit the research tab at www.corelogic.com.au.